Hello everyone, this is Juan Sarmiento and today is Monday, April the 20th. Okay, I have a chart here of the NASDAQ futures. You should try and draw a channel like this. This is a 4-hour chart, but it just applies to the daily chart. It's just easier to draw on the 4-hour chart. If this, you can see that the movement of the stock will be, or the index will be within that range. And the signal would be a break below this trend line, okay? And the signal will be bearish again, continue the downtrend that we stopped back here in March. The same applies for the ES. Okay, same thing. It looks like today was a bad day for the ES. It never made it to the top of the channel, at least not yet, and is now redrawing itself towards the downside. The interesting one is the futures for the Dow. And this one today just gave me a signal that is breaking below the channel. We'll see in the next couple of days whether that's a definite move or a tentative move. The Ichimoku is overhead. That's not the case for the Nasdaq. The Nasdaq has gotten above the Ichimoku cloud. As you can see, went above it. Not for long though. We'll see. We'll see how it holds. But the ES also has not gone above the Ichimoku cloud. It looks more like it's hit its head against it. Curious use of words, but we don't have a definitive sell signal yet on either one of those two, and the Dow neither, but we are approaching that. Okay, what I want to do is begin to switch some of my trades from bullish or neutral to bearish. Okay, let's look at the ones that I want to trade. Qualcomm, okay, and they have earnings coming up. So at the very least, we should be getting out of the bullish trade. Okay, let's take a look, analyze. And it is a diagonal. But look what you can do. Switch it back. And the switched has $15 risk. So we are taking our profits and setting up a bearish trade with practically no risk other than $15. To do that, I take my diagonal and the option that is closest to the current price, I'm going to switch. Okay, so in this case, we have, let's see, 65. Well, what I did here was the oldest, the longest to expiration is May 62.5, and I made it a higher strike price. So essentially took the lowest strike and raised it up to be the higher strike, closer to us. Okay, so it's the opposite of what I said originally. What you have to switch is the one that is farthest and bring it closer to us. So we're 74 here. Well, then I'm going to close the existing long 62.5 call, which is expensive because it's deep in the money, and sell another one that is cheaper, closer to the current price, the current stock price. Okay, and in the process, I'm gonna get a bit of a credit, $4.30. Okay, think about it. This is what it was. We have $200 invested here, practically. We have $104 in profit, and now I'm gonna switch it around, okay? Because I believe that this stock will go lower, perhaps even after expiration, after earnings. We'll have to see what that looks like, okay? But for the time being, I'm gonna make that switch. All right. another one that I have here is NTAP right here. It's another switcheroo, so to speak. This is the put 40 and 35. 40 and 35. The short is the higher strike price and the lowest is the 35, and therefore is the cheaper one. The expensive one is the one closest to us. So now I'm going to bring this one, the 35, closer to us. So how? By selling the 35 and buying the 45 put. In the process, I am paying $4.15. And my risk now becomes 242 with a potential maximum of 341. What was it before? It was 321 for a maximum profit of 284. So now it looks actually better in terms of risk reward. If you want, you can set the slices to the break-even point here and see, make sure that this is a number bigger than 50%. So 75, that means a high probability of making money. Okay, so that's what I'm doing now. And then the next is DE. Okay, with DE, I just want to simply get out. This is a vertical spread, and well, it looks not very good because now it's very close to my strike price here. Let's say, take a look, closer look here. It would be nice if it stayed here, but I have my doubt. Let's take a look at the chart. And yeah, it could go up, but it could go down too. There's no definitive signal, so I say, well, what the heck, let's get out because the pressure is going to be down rather than up. And because I'm not sure, I'd rather err in the side of caution and sell that. I mean, close that vertical, which is to buy it back because it was a short put spread, which is bullish. So I'm just closing that and go to BSX. And this is a loser, but I didn't watch it on Friday, and what happened was that the 39 call expired worthless, but the 38 got assigned, and that must be because the stock ended up between 38 and 39 on Friday. Let's take a look at a chart right here. On Friday, the close was at 38.29. Therefore, the 39 expired, but the 38 got assigned, and that's, look at what happened. Yeah, the stock didn't go higher, so we ended up with stock and the value of it lost a bit of value. So should have put some kind of sign, hey, get out, because so what you can do is on expiration day or the day before expiration, which would be that Friday because expiration is legally the Saturday, and see if you need to close. And I would have closed that 38 strike price call instead of letting be assigned, and now I lost money today, which I didn't have to. So get out and take my pain there. Let's move on to a new trade on LVS, Las Vegas Sand. And today moved down significantly, and the problem with it is that it has earnings, and earnings could give us unexpected results, but I'm still bearish nevertheless. So what you can do is make sure that your stocks expire with sufficient time, your options expire with sufficient time to see this work. And I'm buying a put expiring on June 19, which is 60 days from now. I'm comfortable with that, and I sell a front month, a May 29 put, and that should expire worthless in the worst case scenario, or be assigned, in which case, anyway, it's a diagonal, as you can see, and I like that, so let's send it off. Again, June 19th, the 45 put, and I'm selling the May 29 42 put. Now I'm increasing my maximum risk a little bit to be closer to 40 than to 30 now that our account has grown. Okay, but if I did one, it would be $228 because it's two is $450. It's a little bit more of what I would like to do, but that's okay, as long as I don't do too many of those. Okay, so $456 is my cost. Next is Coca-Cola. And that's my trade. As you can see, is another diagonal, and this is a call credit spread, which means is bearish, and I have bought 3 June 1947 calls and sold 3 May 29 45 calls. I'm risking $417 to make a maximum of $459. Happy with that. And let's send it off. And that is all I have for today. Let's go quickly here and see if there is anything. Microsoft, Palo Alto Networks. Okay, let's look at quick look at those. Okay, Microsoft and Palo Alto Networks is there. Okay, here we are at the edge, the leading edge of our diagonal. So what am I gonna lose? Not much. But if the stock goes down and lands here by expiration, it's actually a good thing. So I'm not too concerned about this. It is still bullish in theory, but it's going negative. Delta is negative, but not by much. So it's really a neutral trade. And if it goes down, the deltas will become more negative, and I could make as much as $500. So I'm not changing it. Sort of a similar thing on Microsoft. We are right here at the top of our cone here. If it goes down to the center of the cone, that would be nice. Okay, but if it stays there, that will be fine too. The puts will erode in value, and that's all there is to it because of theta decay. And Vega as well. Vega decays as well. I think that's pretty much it. Anybody else? No? And tab we already dealt with. Welcome to. Okay, that's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.
Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much. Don't forget to visit www.putgoldgenie.com. Then go and subscribe. You could simply subscribe as a visitor. It is free, and you would have access to several videos of interest for traders. You would be directed to this registration page. It is free. Once you have subscribed as a visitor, feel free to go to the tutorials and select the free videos. These are videos of general interest for all traders. Thank you very much.